Prabhat Avasthi. Let's welcome him, MD and Head of Equities Research at Nomura, India. Prabhat, hi, morning. Let's first start off with what in your mind has been the driver of the rally this time around? Liquidity, yes, but what triggered the liquidity to rush in, and what are the valuations or global events that the market participants are now working with?
Well, the liquidity rush itself was triggered by global events. So the ECB's sort of LTRO and then Fed's statement about prolonged period of lower interest rates, and coupled with the Indian Central Bank's clear stance that rate cycle is peaked. So I think it was more macro. Liquidity doesn't come in because of valuations. That's not a necessary condition. But the fact is that, as you rightly said, people were one-sided. Most investor positioning was on one-sided basis. Basically, most people were overweight defensives, and there were huge amount of shorts. India was a favorite short market of last year, and the global investors who were not dedicated were underweight. So clearly, from perspective of any liquidity rush, there would have been a disproportionate amount of return in India because of the technical positioning of the market. I think one has to also look at the fact that last year was a terrible year for the markets, and you've basically got a payback, which over a 12-month period, if you look at Indian market versus the rest, now the returns, the underperformance doesn't look as stark because of the catch-up. So I think it's part of the rally's catch-up because, as you rightly said, it's one-sided. There was also a bit of one-sided trade there.
Prabhat, morning. So how should investors approach this market? Should they sell this market on every uptick and buy this market on every downtick?
Well, I think what we are advising is to have a diversified approach. What we mean by that is that you probably are not fully out of the headwinds or as far as India is concerned. I mean, remember that growth is slowing down. Remember that there is still a current account deficit, and there is still stresses on external account in terms of repayment cycles of external debt. So the fact is that as long as global liquidity remains strong, you can overcome these issues. But that the fact still remains that India is still has some headwinds as far as the macro outlook is concerned. They have improved possibly, but there is still headwinds. So what we're advising is that you need to have a mix of defensives and rate cyclicals. We are not very bullish on growth for this year, which is a result of past tightening cycle of RBI. So we are more bullish on things like banks, asset owners, real estate companies, etc. And we are less bullish on pure growth stocks in India. And we are also advising to have some exposure to a possible rupee depreciation were the global liquidity to dry out, because what we are seeing at this point in time opposite would happen if global risk was to flare up again. Whether the bias is still positive for the market for the year? Yes, the bias on the overall basis is still positive for the year.
Prabhat, what about autos, and how are you differentiating between companies like Hero MotoCorp and Bajaj? And also Maruti has seen some fun buying. Tata Motors, even since Evoque launch, has been on a tear.
Well, we essentially have been less positive in two-wheelers, and as auto as a whole, I think for the full year we don't really like the relative positioning of the sector this year, because we think that growth rates should start hitting some headwinds, especially in the domestic auto stocks, because of the fact that we have seen 3 great years and that the economy is slowing down. So there will be some impact on growth rates going into this year. The valuation multiples are not exactly cheap in these stocks. They are trading at the upper range of their long-term averages, and this is because the growth rate last 3 years were very robust. So we think that on an overall basis, auto sector per se is going to face headwinds. Within the stocks, I don't want to comment very but the fact is we've been more positive. For example, as I said, Tata Motors is a buy for us, but the stock has run up very sharply. He still positive on Mahindra, and the rest of the stocks are sort of more lukewarm.
But what about financials, and especially some of the mid and large cap PSU banking stocks where the asset quality concerns are high and valuations are attractive?
Well, are they factored in now? They were definitely factored in when these stocks were much cheaper in December. So one of our key overweights was banks and financials for the year 2012. Part of that rally has played out, but I think there is still some room to go. Now, as far as asset concerns are partly cyclical because of the rate cycle, which is on the way down. And secondly, there were asset concerns with regard to specific sector issues such as power sector. And we have seen increased focus of the government to sort out these issues, which is why I think you're seeing some of this rally. So I think from here you probably will have to be more specific to probably stocks, but sector as a whole we think is still a good bet over the year 2012.
Prabhat, finally, what among IT are you advising to clients? Because rupee has sharply recovered, but growth moderation concerns as well are looming.
Well, frankly, we are advising investors to be overweight this sector for the year. One, because we don't think there has been a fundamental sort of deterioration in growth rates of the sector. US is starting to recover, for example, and we believe that there was some postponement of demand which will come back. So no doubt the sector is growing slower, but the fact is that the valuations are probably reflecting that already across the stocks and sector. Secondly, we think that it's an insurance against any possible global risk aversion which might take rupee down again. So we don't know for sure. At this point in time, the environment looks fantastic, but only about a month back we were seeing exactly the opposite picture. So from a portfolio perspective, it makes a lot of sense to have some IT now, especially because rupee has already gone to 49. The stocks in general have underperformed because of that, and the valuations are not very expensive.